So in this module, you will be shown a few more examples on the retail heaven theme, as well as the London knockout theme. So with the retail heaven in mind, you have, of course, seen this illustration in front of you over here to the left. Lovely drawings, that is. So essentially, if you remember what this was, it's where price essentially is trending in one direction. And usually the reason for that is when there's either a major inducement to the left or a mitigation to the left, usually on a higher time frame. So that could be the 1 hour, or it could even be the 4 hour or the 30 minutes. But usually it's of significance to the left. For example, this reaction here in Asia may actually be significant to either liquidity to the left or a mitigation. And hence that's why we don't get the inducement of Asia low over here. So instead, what price does, as you can see in this example, based on the illustration aspects, that is, of course, your London Open, and this is your New York trap, well, New York Open trap. So essentially what happens here is we break out with Frankfurt Open. London Open gives this little pullback opportunity. Price trades over here in the midline. You will be taught that a little bit later on. So that's also another trade opportunity of the Asia midline. So keep that one in mind. So you have your opportunity there. And then what happens is price now continues bullish for the rest of the day, or bearish, again, both variations. And then New York actually continues that further on to greater levels of liquidity to the left, or POIs essentially. So that's important to understand these variations. Sometimes you may not get London form this pullback like this, but instead what you may have is that Frankfurt breaks out, creates this inducement reversal. So this could be Frankfurt, and then this midline opportunity here that we had marked up, that could actually be London. So again, variations in the sense when it comes to timing. So yeah, you may not get the London Open inducement outside of Asia, maybe Frankfurt, and then London may be your opportunity for the continuation, which is actually nicer in that sense. However, that could additionally be MM1 or MM2, well, Magic Manipulation Minutes 1 or Magic Manipulation Minutes 2. It's kind of a mouthful to say. But nevertheless, I hope somewhat of this makes sense. Again, we'll be covering a few examples just to help clarify that. So if we look at our first example, what we currently have here is GJ, and this was on the 2nd of May. So if we look at the overall daily picture, again, this is a hindsight thing at the moment, just purely so you can see what's going on and how we can essentially identify the opportunities. We will cover this in a little bit more detail later on when it comes to the entry helper part of this curriculum, which is probably the most important part when it comes to the whole LIT understanding and entry opportunities. So in this example, what we have in Asia over here is an inducement high. And again, it's our main inducement. So what this means is to the left, we've induced major liquidity, essentially. Again, you can see perfect vector candles. So that gives us the characteristics that actually we may not get an inducement of Asia high, as this actually is an inducement in itself. So essentially what that means is, as you can see here, is London actually then mitigates the Asia inducement, which is very valid. But of course, you need to understand this prior and not just look at it and think, okay, that means we can now take Asia mitigation points. It's not always the case. Of course, it needs to have relevant sense. So this will be the mitigation stage of the hold, build-up, inducement, mitigation. Even here, you get this trend line type of formation. That's number 1, your build-up. Number 2, inducement. And then, of course, your number 3, being the perfect mitigation in London Open, also timing confirmed. So what we have here is nothing too crazy in Frankfurt. You don't always get a nice reaction in Frankfurt. That's fine. We can skip that. Perfect. We can look for potential sells over here. Now, this is, of course, an initial mitigation, and that doesn't necessarily mean we're interested, because we're not type to take random mitigation points or just guess that this inducement will hold. We of course have more complemences. Now in this case, we would have these lower time frame mitigation zones. Again, you will be taught entry approaches next week in week 4, where we will show you the various ways to actually enter these positions. So What we have, however, and that you have been taught, is this magic manipulation minutes 2 entry. So at 12:20, well, it's 12:20 in this case, so that is the absolute maximum of the window, if you remember. So we go 10 minutes either side, so that's not to the minute, of course, unfortunately. Nevertheless, it still fits in the 10 minutes outside of the 12:30 window. So that could be 12:20 or it could be 12:40. So what we have here is perfect mitigation. You can see in the purple box. Again, these are your continuation trades. So to take something like this obviously means that you didn't get the absolute high. And that's actually really important and actually good, I would say, to understand that you don't need to necessarily take the extreme. If you want confirmed trades that may be a bit later on, as it is here, where you're not in the absolute top, nevertheless, this is more confirmed than this probably is over here. So that's very key. Again, you get the characteristics if you just inducement high, fractal inducement, remember, because we don't take out this inducement, we instead take out all of this trend line liquidity over here, as well as these early sellers. So now we've had our inducement high. What happens? We still have this liquidity here, a little bit tricky to draw, but lows, inducement goes higher. Then, of course, inducement high. Now we go lower, take out this over here, as well as these lows here. Now, if you remember, what is this? Your smart money trap again. So can you see how the difference of this mitigation over here in Asia makes sense, but this one doesn't? This one's random. That is a pure smart money trap. Do not take something like that, especially as we've had a main inducement here. And of course, perfect vector candles, everything here makes sense to take sells. So you have your smart money trap over there. We also have Asia low just about being induced, which is perfect, because what happens then is this minor inducement low only gears us up for a pullback to then take the sells, because ultimately we've had the main inducement high, so we can now take these sells and then gear up for the continuation bearish. Okay, horrible drawings, but let's get nice on that. So in this case, taking this sell is nice and highly confirmed, or taking an extreme, if you're a little bit more risky, you can of course take a consecutive mitigation, which will be something like this one over here. So then what happens is New York actually then formulates the continuation as well. So both London and New York give us the continuation in one direction. And what's happening as we get these little points over here to the left, to the current price action, sorry, not to the left. What it means is to the left, we have got these minor inducements. So what it will look like, well, this is going to be tricky to draw, but let's just say we have something like this. What's happening here is we get this inducement low. So essentially what this is the inducement low, the little pullback, continues, pullback, continues, and pullback. So it's taken out these points here only to have these minor inducements low, like such, these pullbacks high over here, and then, of course, the main points where you should be selling only if confirmed. So, of course, this is a mitigation. We have entry helper confirmations of how you could potentially take that only if it permits. Again, fractal liquidity, little trend line type of stuff going on there, perfect vector candles, take the mitigation. So this in itself is a pure lit cycle trade. May not necessarily be entry helper confirmed. Again, that's based on the checklist, if you take certain trades or not. Again, you'll be given the checklist of how you can adapt it to your own trading style. Here, what we have in New York is actually an inducement high of all of this liquidity, the equal highs. Then we get the continuation bearish. Now, as we get later on in the day, of course, 5 p.m. being probably around here, is of course London close. So we're not really interested at that point. We get this kind of not so nice build up type of thing, but again, it does induce. So we get this reaction here from possibly these last areas of supply or mitigation, probably on the 15-minute, and then the continuation low along with the smart money trap. Why is that? Because there's more liquidity to the left. So this makes total sense. So essentially your entries will be up here, as well as again, you will be taught inducement trades, so it will be the new inducement trade as well as these other areas of mitigations like such here and of course potentially here, but that's not the nicest. So with that being said, let's see another example. So again, this is another example of GJ. So what happens here on the 26th of April is we have our main inducement to the left. Now, in this case, the characteristics of the vectors aren't so clear, but nevertheless, you've got eyes, of course. You can see if there's a structural point like such that gets taken out by a few pips when it comes to a major inducement, usually. So what happens? Price creates this reversal, essentially, or now it will form a continuation. We get this trend line type of liquidity. Initially, if you analyze the main inducement here, you have your 1. You do get the vectors from this point. It does just get a little slow when it comes to the high. So then, of course, inducement being 2. Essentially, you could somewhat say mitigation areas in there. Of course, not valid for us when it comes to timing anyways. So essentially, we would take the continuation trade when it presents. Smart money trap. Missed off this 5M, but it tapped in that IFC or POI over there, which would be likely the 15M. So what happens at this point is we get the perfect opportunity at MM1. Again, not to the minute. Remember, this is 10 minutes outside of the window, the absolute max. And then we get the perfect mitigation of London Open, right? And then it's a clear mitigation as well as it being an EDM trade. Now, you will be taught the EDM, of course, a little bit later on of why this isn't just a mitigation, it's also EDM confirmed. Then, of course, we haven't even broken out of Asia low at this point, so we definitely know that will be an initial target. Probably not the best when it comes to risk reward to take the Asia low there. That could be roughly a 1 to 4 if I see that correctly. But nevertheless, there likely is a lot of liquidity to the left. You can even see here, smart money trap zone. Now, I'm going to try to draw straight, but yeah, this is not working. Okay, let's just pretend that was a straight line, but it's either an FFS or a smart money trap. I assume it's an FFS based on this reaction there. Oh, sorry, a smart money trap based on that reaction. But nevertheless, what happens? New York continues. So New York may not necessarily give the nicest entries. That is not nice, I'll be completely honest. But your nice entry was in, of course, MM1, as well as the London Open POI that was formed. So yeah, you may not always get the clearest entries in every single timing point, but there is at least one, as you can see. So with that being said, let's see another example. So we have, of course, over here, another retail heaven. So again, this is a bullish version now. So what we have is our main inducement here. Firstly, what is there? The buildup of liquidity both ways we can draw at this point. Price induces low, gives this Asia mitigation. Not valid for us, but for understanding purposes, of course, that is nice to understand. Nevertheless, what happens? London Open. So now we want to continue. So we're not necessarily looking for the inducement of Asia low over here because we've had a main inducement. So we're not expecting necessarily the main inducement to be induced again, as it's very valid to then hold. So what happens is in London Open, however, we actually get this really nice let. Now it doesn't look very clear here on the 5 minute, but on the 1 minute, this is a let. And what that is, of course, it also induces structure here to the left, liquidity there as well. So taking the entry from, let's say, wick in here is perfect. Get these fractal highs as well as the Asia highs as well. So at minimum, you can expect price to, of course, tap into there. Get this tiny little inducement of high, does this little reaction, not the craziest pullback, nevertheless creates liquidity. Let's get that nice and juicy again. So liquidity. And then what happens? Again, price continues. It's going to keep doing this cycle where there's probably a structure, internal structure to the left that get induced. We get a pullback. Only if a pullback presents an opportunity do we then take a pullback trade. In this case, probably not. You can't really tell on the 5 minute, but likelihood is even on the 1 minute, there's no opportunity to take the sell unless you're very advanced to take the inducement trade, which some of you will be soon. So then what happens? Of course, we get the reaction bearish. Nevertheless, what are we actually looking for is buys. So essentially, to take the buys, we need to identify POIs as well as inducements. So usually the POIs are the last thing when it comes to when you're waiting for a reversal or pullback. You essentially want the inducement first off relevant liquidity, which then may be in a POI. So we don't look at just the POI randomly. We need to see, is there a cycle that could be in play? So we have number one here, which is your build-up, as well as, of course, little areas randomly over there too. But nevertheless, that's probably the clearest one. So we have number one. Number two would essentially be the inducement of this. So as long as it breaks below that, that's, of course, your inducement. So from this point, it's your inducement being number two. At the same time, kind of covered that. Let's just rewind it. You can see the perfect vector candles. Perfect. So we've got the characteristics of the inducement, of how it moves and the volatility, essentially. Then what we have is also a really nice POI here. This is, of course, in the 1M, hence 5M doesn't look very clear as a POI. So that's where you can take the mitigation. EDM, just a little hint, should I say, is a mitigation-based trade, essentially being, of course, the opportunity for entry. So this being perfect EDM trade and how you can then take that and climb to higher levels. Now, with that being said, you don't just have your EDM trade or your London Open trade. So you've got two trades here. You've got one here, two there. Now, New York doesn't always present it if it's a retail heaven day. What likely happens is New York may mess around a little bit with some sort of like liquidity like that and then just continue and eventually be taken out at the right time. Sometimes, however, you do get a really nice opportunity in New York as well. So in this case, you can see again, it's a mitigation. Again, that would be a 1M and it's an EDM. So it's not just a mitigation, it's an EDM trade, which is, of course, way more confirmed than a random trap or smart money concept type of POI, whatever you want to call it. Nevertheless, you identify your targets to the left, then you can close here in New York. We could also possibly get little reversals, etc. as we then head into London close. Maybe we get choppiness. So ideally, it's nice to, of course, close at a relevant area, even if it's during New York, because the price has moved incredibly from this point to this point. So very nice movement in New York on this day. So, with that being said, let's now hop onto the London knockout trades. So, now we have, of course, the London knockout trade. Now, this is probably a little bit easier to identify, as you can see in the name of London knockout. It basically is an inducement low in London, or high. It could be high too. So, it's an inducement in London open, usually out of Asia range, high or low, of course. What happens, of course, then, is we get a continuation for the rest of the day. And New York trap may not necessarily give us the reversal characteristic, but it may actually give us the continuation instead. It really depends what's going on to the left when it comes to the higher time frame of where to determine the movement, essentially, of how these pullbacks may form and why they form where they are is usually price action to the left, taking out internal structures. So usually after a structure, price may give a pullback, which is these areas over here as well as here. So the London knockout, in my opinion, is a little bit easier to identify as opposed to retail heavens, because it's, again, you waiting for the specific time frame of the London open window. So if we look at our first example, what we have here is a very, very big Asia range for some reason here. So now this may look actually, as we were talking about the retail heaven and the main inducement aspect, this may actually look like a main inducement. However, it may look like it in right now, but you really need to look at the rest of the chart, which is kind of impossible to put on this slide. But nevertheless, you can, of course, backtest and see how these may not actually mean anything. It could be some sort of news or fundamental stuff. I do have a few charts on here of gold, which I know is a little bit more volatile when it comes to fundamentals, especially at the randomest times in Asia. I've noticed that too. So what we have here, again, for the argument's sake of the cycle understanding, you have liquidity. That's not the very nice trend line or whatever. Then what we have is 1 being your build-up, 2 being your inducement. But first, let's see. Okay, it's got vector candles. It's got that push upwards with strength and momentum. So then 3 would be a mitigation. Again, we're not interested in this when it comes to Asia anyways. However, we will be able to then determine why this indeed was a smart money trap. As you can see over here, it did not actually react, essentially. It did break above this POI. So why is this essentially a smart money trap? We will get into that in a little while. So, wow, I like that. That's the best I've probably drawn. With that being said, let's now again continue the story. We've had our inducement high. We also have trendline liquidity in various forms here. So 1, let's do that again. 2, inducement low. Again, we can't predict where the inducement happens in the sense, did it end here? Clearly not. It technically did end somewhat here, but then clearly not. It ended over here. So yeah, again, you don't want to predict it, and that's why we have various entry opportunities and approaches for you to enter the trade at the right time and not necessarily take inducement trades, as you could get stopped out. You can see here twice before you take it. Again, these aren't valid anyways because they're in Asia. So that being said, we have whatever 2 over here, not finished. What do we also have? The most perfect triple top equal highs over here. So from this so-called inducement here in Asia, what's the chances that can happen? We also get a very weak reaction, trend line, lows. So we get a nice build up to the downside, meaning we can possibly expect an inducement low off this liquidity. We have the build up, so we have our number 1 step over here. We also have a build up on the opposite side. So we know, okay, price may induce low or high. It's going to go one way or the other, but which way would it go first is the likelihood chance of what can we essentially predict with what we've got in front of us. We've got Asia low, which is again a minor inducement anyways, minor. Right, so it's a minor inducement either way. So what happens? London Open gives us a perfect inducement low. So that's 2 now. Mitigation, fortunately, didn't present here. And this is why we also have inducement trades, which actually don't classify a mitigation, purely because you may also notice that mitigations don't always appear. Now, this is highly advanced, so I do not recommend you dive into the inducement, as I'm not going to promise, but I can be very sure you will take more losses than anything, and then complain that let's done this to you. It shouldn't do it to you, so don't do it. But yeah, nevertheless, that's an inducement trade, still very valid. It just doesn't have a mitigation, which is the ideal confirmed entry. Instead, we get this really nice reaction, which now takes out this liquidity. So that is an inducement high too. Now, how can we understand not to take, an inducement the wrong way? Why would you not take this trade now as a sell, assuming that we've got 1 over here, we've got 2 here, let's wait for mitigation and expect sells. Now, the reason why we don't do that, in this case, it would be lovely if we could get a mitigation over here and then trade a pullback to then take the POI. Now, that is perfect if it presents. You can see over here, well, not anymore with my drawings. You can see here, there's not very nice reaction. Now, on the 1M, it's very messy. So that's why this will be scratched off, as it did not tick our confluences when it comes to even the entry helper. So that's an invalid trade. We simply wait for a build-up. So that's what will happen a lot of the time, is prices actually building up liquidity. This is why we really, really strongly inform you to wait for the inducement and then take, of course, the entries if relevant. Don't just randomly assume. So in this case, what we have currently is liquidity of some sort, little kind of pullback potential, then perfect, beautiful trendline type of liquidity, fractal liquidity over there. At the same time, vector candles to continue. So that's the same as this, vector candles. So this is how we form fractal cycles upon each other, where we have 1 over here, 2 over there. We have now, this is your 1 as well. This line over here is 1. That's 1, 2. So having the 1 in both stages means we, of course, will expect the inducement of both ways. Here, we technically have our inducement exactly here, as we get perfect vector candles breaking out this liquidity here. Now, again, it builds upon each other, takes out these liquidity weak points. That's your 2, that's your 1. Now we continue higher. that's your 1, that's your 2. I really hope I'm not confusing you with these numbers. But nevertheless, just remember build-up, inducement. Mitigation, of course, is the entry part, but build-up and inducement is really key, in my opinion. Those two stages, most importantly. So now we stop here. Now, why do we potentially stop here? Now, let's try to be as straight as we can. Oh, it's pretty straight. Okay, it's pretty straight. I'm happy with that. You can see exactly why I chose that. That's essentially what your mitigation will be. So we know this is a smart money trap. Remember I mentioned it, but why? Why is it a smart money trap? Now we've had, of course, the whole cycle away from the downside over here. So we can likely expect price to now continue. Now it really depends on the higher time frame. That's the biggest key importance here is what is going on. And like right now, from what you're looking at is an intraday basis. Looking to the left of where liquidity is, as well as using the 1 hour or the 30-minute, sometimes the 4H. I don't always recommend that, to be honest, when it comes to intraday, as it can probably confuse you a little bit more than anything. So this likely means there's more liquidity or targets to the high side in the form of all the liquidity being spoken about. So trend line type of stuff, your breakout traders being around here, kind of, if we tap back, and continue, etc. Highs, lows, trend lines, etc. So just remember to keep that in mind always when it comes to looking to the left for liquidity and not just intraday. Intraday is pretty easy in my opinion. Well, that's me saying it, but as I've explained a lot here, the same cycle of fractal liquidity, just the higher time frame will help you determine when to continue and when to reverse, essentially. So what happens, essentially, we have our smart money trap reaction over here. So that could be tradable only if it presents, a bit like how I mentioned here, only if it presents. So only if price presents an opportunity, then okay, you can see it did not present, so you're not going to take this. So of course, don't take anything here or don't randomly guess the inducement at this point, or that price may mitigate. Now you can see these imbalances being filled doesn't necessarily mean it's valid in our confidences. Again, we're pretty precise on how we trade, and confidences we present purely because we know there's so many valid opportunities. Now it's important to have a very high win rate and not just guess that sometimes, okay, this worked 1 out of 10 times or 2 out of 10 times. It's not going to work every time then, is it? Okay, with that being said, let's just continue with this reversal going on over here. What happens? Price now induces this. Remember, that was an inducement alert first, but now we're having the reversal. That's, of course, smart money trap. We're not interested in this randomly. Why is that? Because remember the number 1 we had over here, that perfect liquidity. That's why we don't take this zone here thinking it's the number 3 being the mitigation, essentially, because we've induced here. You think that's a cycle. It's in the wrong place. These are fractal cycles. And again, you're going to see it everywhere. Just try not to get confused and look out for the clearest ones. So that being said, now it looks very empty. So you have your traps everywhere. That's 100% a very easy trap. Maybe that was not an easy one, but I hope with my explanation it makes sense. So here, perfect FFS actually in this case. Why? Remember the 1. It's pretty obvious. Now what happens? New York gives us the perfect inducement low. Perfect. But 2, you can of course take the mitigation zones here. Again, we would have the entry helper confirming exactly why or why not, or how confirmed it is based on these reactions. It looks like what happened here was the initial reaction here. Price, of course, in my opinion, that's weak. It's a very weak reaction, so it gives us very clear and volatile reaction low just to take out this liquidity and this reaction. That's why you don't take sells, because it's liquidity. New York, continues now. Takes out this high as well as Asia high. So your trap now is broken. So all your smart money traders, of course, are probably sad or at break even, which would be the more smart option as opposed to it being an L, because it should not be an L anyways. But nevertheless, I hope the understanding part of that made sense. So let's look at another example. Next example, same thing. Again, a little bit different here. We have a bit more price action to the left. What we have, this beautiful quadruple top. Usually rare to find in my opinion, but it's so lovely when it's like that because it's just a clear liquidity target. What do we get now? So Frankfurt, I believe, would be around here. So that'll be your FFO trade, essentially. If it presents, I would not really recommend that when you're new. Nevertheless, breaks liquidity here as well as these lows over there as well. Inducement low, essentially. Price will continue higher. Remember, these trades are trading the inducement, essentially. So you're trading with the inducement over here being, of course, vector candles. Unfortunately, they're a little bit sad over there, taking out yesterday's high. Not a mitigation, but yesterday's high, probably because it was weak and it didn't actually have any significance to the left. So it likely means this wasn't really an inducement or a clear one. You can probably see even here, timing's a little bit cut off right there, but this is later on in the day anyways. What we get, of course, is then inducement high of London open. In this case, you can't tell properly because on the 1M it's probably more clearer, but you can see it's not a very nice reaction when it comes to a mitigation. There probably was something in there 1M. If there wasn't a 1M mitigation, it likely means that this was an inducement purely of this liquidity here. So that's your 1, that's your 2. If it's an inducement into this mitigation, if it presents, lovely. If not, it's purely an inducement of the relevant liquidity. Now, both are correct. So that's where you take an inducement trade and just put your stops above the high. Again, not getting into entry opportunities just yet, but nevertheless, I hope that even makes sense. What we have currently then is we have our number 2 right there. Liquidity, whatever format you want to call that, a trend line, whatever. Let's just clear that a little bit. So liquidity, more liquidity, well, it's a bit more for trend line, that is. Then, of course, we have the low. Now, I know this is one of your type of spread-based lows, of course, so it's not really valid anyways. Technically, the low you would classify is actually there. So initial targets would be there, but let's get it. Oh, that's not good. Let's do it again. Okay, not very good at drawing straight lines, so I apologize for that one, but let's do it again. Okay, you know what? That's a straight line, so that's a double bottom thing. So that's why we know at least it may at least react in this zone here when it comes to this point, when it comes to the first TP. Wow, so that a lot. So your TP essentially would be below this reaction and potentially, of course, Asia low, but just to keep an eye out that that's not really the valid low. This one would be, because that's a spread thing and it's going to be different for every broker. Nevertheless, it took out nice liquidity anyways. So that being said, what do we get? New York open continuation. So what happens is price does indeed induce low, perfect internal liquidity, vector candles, inducement, number 2. Only if a mitigation presents initially do we take it as a pullback, because remember, to the left is more important. So likelihood is there wasn't enough liquidity to the, liquidity to the left was not induced enough, should I say. So it happens in stages. Then we get a pullback. That's fine. Wait for the pullback, look for the relevant areas. Now, some could say, why not here? Because, that's a nice looking imbalance mitigation thing, just like this is. Now you have to remember what becomes relevant. We have relevant liquidity here, as well as, of course, this false movements. You can see it's tapped about 4 or 5 times where it gave these wicks. So it's given rejection, essentially, if you want to call it that. Price induces high 1, last little time, likelihood is the 1M here. Now, the reason why we would take this trade is because it would likely be EDM or LIT confirmed. And in my opinion, this would probably be an EDM based on what it looks like. So that's a really nice reaction. If you're not confident taking that, don't worry. You have the consecutive plays to take, which would likely be right here, actually, to be precise. Then we get liquidity to the downside. Of course, these reactions are now invalidated. Low will be taken out. So that's like an internal inducement. That's why we call it like a structural internal inducement, because it's not always liquidity. We get induced in the obvious forms like trend lines, support, resistance, and all the other ones that you've been taught, all these smart money traps. It's also structure too. And that's why, structure is, I was going to swear there, but structure is not very valid, should I say. So, right, with that being said, we get an inducement low, almost heading into London close, probably right there it would have been, and that's why you get this choppy behavior. So ideally, close after we get this reaction would be around there. And then take, of course, your profits for the day. So, yeah, that looks pretty clear to me. I hope it makes sense to you. If not, let me know. Now, let's just use another example, why don't we? London knockout. Now everything's looking the same to me. I don't know about yourself, but everything looks pretty much the same. It's the same stuff everywhere. So the London knockout is really nice to see, and it's really a nice move usually because it's like a trending day essentially, just like the retail heaven, just a bit easier to get into. So with that being said, this liquidity looks very nice in my opinion. Got this trend line, the wiggly one in my version. What do we also get? This build up, not the nicest drawing. Wow, that's a really nice build up there. Again, it'll be like the trend line type of thing here. Then, you know, okay, well, let's get rid of that one. That one's a bit hard to draw. Okay, let's leave it like that. Nevertheless, it's always a build up, usually in Asia, unless it's relevant. Now, in this case, we get our midline trade, and it's a FFO1, so Frankfurt Open. Now, this happens a lot, and it's really nice when it does, because this enables you to take that quick trade and then to likely be able to take 2 trades. Now, this is a very quick trade in the sense you need to close it. So it's a midline trade around here. You will be given, of course, the midline indicator, which will be exactly the midline. Again, you will be taught that soon, so don't worry. But nevertheless, Frankfurt Open being here, it takes out number 1 liquidity there, as well as, of course, that one. It also is a number 2 because it's an inducement off these liquidity points over here, as well as it being a 3 in general when it comes to the mitigation. Now, it's not a 3 off the inducement. That would be the 3 right here. So that's the mitigation of the inducement. This is just an inducement into a POI or mitigation area. Does that make sense? Take that in, breathe it in. So with that being said, of course, London Open then forms the continuation outside of Asia High, taking out one here, because that's Asia High, of course, being a 2, because it's, of course, an inducement high, mitigation perfect. Again, Entry Helper will really help you not to just take a mitigation, but take the right mitigation. Even there, that's really clean, actually, too. Perfect liquidity taken out upon the vector candle. So lots of liquidity here. London Open, perfect inducement high. Price reverses. Now, let's just clear that up a little bit. So from there was a 2. Price reverses, takes out now this reaction, and this is why we close this trade of the buys here, because it, of course, completes its initial target, which is not the biggest target, but a very nice target. So essentially, your sells are now, of course, you could say pro-trend, whatever you want to call it. Then what we get, perfect liquidity. Price is constantly going to stop within these zones in Asia and just give you this confusion. It's doing that on purpose, so you get essentially confused. So when it comes to the continuation trade, like, yeah, you get mitigation areas here, but are they valid? Clearly not, because they react until this point only to then, of course, get tapped into it twice, if you held, that is. So what happens is you get this choppiness. It's better to wait for this mess to play out. You get a nice inducement low outside of Asia at this point. So 1 being liquidity. That's a very good one. Liquidity there. 2 being the inducement. Remember, pullback inducement, adjusting Asia low. In this case, that's not enough. That's in this case, remember, it's not every case. Again, liquidity. Likelihood is more was there. Couldn't fit it in clearly. Then, of course, more liquidity targets. Pullback wise, we can expect an inducement high. Now, in this case, it's a little bit tricky because technically this is an inducement high of these liquidity areas here. Then you get actually a trap. So why was this essentially a trap? Now, this is where it gets a little bit complicated, I would say, when it comes to not always taking the mitigation zones, because price already from this point fulfilled initial target over here being Asia low, as well as, of course, these equal lows there. So essentially this leg may now have been, you could say, complete from a fractal intraday basis. So upon a pullback, we also want something significant, which is, again, the cycle. So when it comes to the pullback, it's better to wait for an inducement, actually, as opposed to taking a mitigation. In my opinion, it's safer to wait for the inducement than to take mitigations in general. If you took that, that's fine. Maybe it's just a break even. Hopefully it's a break even. Should be. What we get instead, perfect little baby inducement of this over here. Now, when you get an inducement of this, this is where it helps us determine not to take anything in this leg, because now it's a smart money trap. Probably was right there. I'm just obviously marking that up based on the likelihood of it being a 1 minute thing. So, inducement high being number 2, build up essentially being this structural high, as well as liquidity here, smart money trap type of reaction. we get our reaction bearish now. Of course, price takes out these zones as well as liquidity to the left. A little bit of a messier example when it comes to price action. It's very choppy on this day for some reason. Not sure what the pair was. I don't know why I didn't draw it. So apologies for that one. If you could find it, that would be a nice little bonus, should I say. Figure out what pair this was on the 27th of May. That would be nice. So next example. And it's our final example, so don't worry if you're falling off your chair with all of these same example-looking things. Now here, same characteristic. We have Asia high being the 1 here, as well as these highs here being 1, 2. So you're going to have build-ups upon build-ups, so more than one point of a minor inducement. Then what we have, trend line. This is me just marking up, of course, Asia. Let's just identify liquidity, these lows over here, Asia low. Of course, you don't really need to mark up Asia lows. It is below the purple box, which is kind of obvious, hopefully, at this point. So what happens? Frankfurt Open is probably, let me see, somewhere around here in this area. Now, it's a riskier trade to take a mitigation when you're basically trading a trend line. And that's why trend line traders and support and resistance traders get happy, because it does give them some reaction sometimes. Not all the time, but sometimes. So what happens is taking that is not validated usually with ourselves when it comes to even the entry alpha. That's fine. We're going to take the pro trend. But before that, let's not forget these ones over there. Vector candle only started there, but it's Asia. It's a bit slow anyways. Number 2, and that's why price continues. People think it's a trend line, etc. Then, of course, we get an inducement high. Technically, your minor inducement there. However, the main inducement being to the left of whatever type of liquidity it is. So this is why Asia high inducement isn't always the one where it now continues. You will notice that in recent examples, actually, of how price, of course, induces Asia high and continues. There's, of course, relevance to why that is. Remember, just always look to the left. So, inducement high, that's your main inducement based on what's to the left. We get hesitation in both ways over here anyways. This, of course, is 1 anyways. We're expecting that to be taken out. So now we've had our main inducement high. Of course, every area below is going to become a smart money trap. Right here. Right here. This one reacts a bit nicer. And then, of course, we have these lower levels here. And that's a smart money, an FFS. I'm not going to attempt to draw a straight line there. That's horrible anyways. You know what? Let's do it. Okay, so it's a smart FFS, but nevertheless, you can see it's like 3 trap zone, and that's purely because we're now trading away. We don't care what's to the left of this intraday price action over here. So what we get, smart money trap there, gives a reaction, right? Potentially mitigation somewhere in this area, gives a inducement high. So 2 of the 1. As well as this weak reactions. These are your liquidity. 2, mitigation usually is there. This case is a little bit weak because price now actually, let's make that clearer, induces low only just to induce high again. It's not an easy example to identify when it comes to the inducement being the last point. That's a beautiful one. Mitigation would have been actually really nice there, just didn't sustain. Price actually made another cycle, only to then induce high one last time of that reaction. So if you didn't break even, you would be, I would say, lucky in quotation marks, but nevertheless, it's not the clearest one. But what we have for this understanding of the cycle is New York is purely continuation. There's 0 opportunities to get in there, maybe on the one end, but it doesn't look like it. So what happens? Liquidity starts to slow down towards the end of the day, and we break lower levels, possibly over here, which of course isn't there at the moment. So I hope that generally makes sense when it comes to the London knockout aspect. So there is always at least one trade to take when it comes to it. It may not necessarily be the extreme. You can see even here, this extreme didn't get tagged. That's fine. We have to then read what happens in between and the chances of price action actually. Then potentially, is it going to mitigate? Probably not. This is why we wait for the inducement and not just guess. This example is a little bit advanced, I would say, actually. So yeah, I hope that made sense. If you have any questions, of course, let me know in the week 3 chat. Of course, we're all here to help you and answer your questions. So I hope you enjoyed that.